and I will start with the first one. This is from Padma. She's a senior citizen. She says she has RBL Bank at levels of 190 and Indian Bank at 185 level. She's wondering whether to hold or shift to other bank scripts. Rajesh, I'll come to you first. How do you see these two counters? Should you shift or should she hold on?
As far as RBL numbers are concerned, they were pretty bad, and there are no hopes that they're going to revive in the near future too. It would be better to switch out of RBL Bank and maybe switch to a better name banks like HDFC or Kotak, since she's a senior citizen. I would say go for a stable bank like HDFC, or in PSU space, SBI would be a better pick. As far as Indian banking is concerned, again, there I would say switch from Indian Bank to Bank of Baroda, which the numbers were pretty good, and we believe that in the very short term, by short term I mean in the next 1 quarter or two, this bank can give you 20-25% return from current market price. So I would say switch from your RBL and Indian Bank, that's a PSU in the private space, from to HDFC or Kotak to or a Bank of Baroda.
Okay, this one also is for you, Rajesh, and this one is from Soumitra, and he's saying that he's planning to sell his holding in Coromandel International and reinvest the money either in alkyl amines or in Sumitomo Chemical. So he wants to know whether this move actually makes sense, that is to take off money from Coromandel and reinvest in either of these stocks. And if you think that this move is apt, then which of these stocks should he invest in? Should he invest in alkyl amines or should he go for Sumitomo Chemicals?
See, it's a very tricky question, I would say, because I would say stay put with Coromandel if you are a long-term investor. The company is doing really good, belongs to Murugappa Group. They have good portfolio of fertilizer, they have phosphates and all, and they are doing very well. So there's no point in taking money out of Coromandel. But again, the stocks which you have chosen, alkyl amines and other one, what you said?
Rajesh, it is either alkyl amines or Sumitomo Chemicals. Which of these counters should he look to invest in? Is what he's asking.
Sumitomo can be a good bet in the short term because it has corrected quite a lot. The numbers have been good. They have a good, reasonably good portfolio of products. I think Sumitomo can be having a look, but I would again say that stay put with Coromandel. If you are planning to invest some new money, then go for Sumitomo. Otherwise, Coromandel for a longer term is a very good bet.
Kunal, I'm coming to you for the next one. Max Ventures is the name of the counter. We've got a viewer, Chirag, who bought at levels of 65, so he's making quite a killing. The stock is currently trading at 134 or so. He's got a relatively long-term time frame. He can hold for the next 2 to 3 years. He's wondering whether to hold or to sell at this juncture.
Well, I think if that's the kind of a time frame, then you can definitely look to hold on to the stock. Even after such a steep rally the stock has seen in the last 14-15 months as such. But then, on the short-term charts, it's getting a bit into an overbought territory. That's the only concern which I have with the stock. Now, short-term wise, of course, the stocks can get into a slight corrective phase, but then the demand would come back again, and possibly the stock can continue to move up higher. So I think if that's a short-term adjustment which you can bear up, then I believe you should hold on to your investments over here. Short-term wise, as I said, possibly the stock can come back towards say 120 to kind of a short-term support level before it manages to sort of resurrect and see a demand resurgence yet again. So long-term wise, very attractive. Would definitely recommend to hold.
This one is from Balan, and he's saying he has 300 shares in Agarwal Industries. He's purchased at 350 levels. Should I continue or should I look to switch to IRCTC or KPIT for the medium term or any other counters? Rajesh, do you actually track this particular stock, Agarwal Industries? And what should Balan do? Stay put with it or look to switch to IRCTC, KPIT Tech or any other better counters that you can think of for the medium term?
See, Agarwal Industries is basically into bitumen, which is used in various kind of products like road construction and all. But having said that, it's a very small company with a very small operations, and at this point of time, the market is in a strong up move, and all the counters are moving, but moving up. But these kind of market gives you an opportunity to get out of these smaller companies. So I would say, if you are in profit, book your profit, move your money to either IRCTC or some other strong counters which are more stable and on a larger scale. So even if something goes wrong, market corrects for some time, you are on a safer grounds.
Kunal, I'm coming to you for the next one. Raj from Chennai is asking about Reliance Industries. This is a stock that's trading lower by about 2% in trade today. How is it looking on the longer term charts though? Can you use this opportunity to nibble in?
Well, longer term charts look attractive, but maybe in terms of levels, it may not be an apt level or a sort of a precise level to try and look at, buying the stock at current levels. What had happened earlier for Reliance Industries was the stock bouncing off, initially from the 2440, 2450 mark, support mark, which was hit in the end of October, start of November. From there, the stock rallied up 150 rupees, and now it's trying to, get back into a sort of a downtrending mode, maybe a possible test of that 2450 mark as well. I would, also suggest that since the stock is lacking its momentum, there could be a possibility that maybe if the stock gets into a corrective phase, it may come back to say 2400 or slightly lower than that as well. So buying on dips could be a good approach, but I believe you should probably wait for at least 2400 or slightly lower levels than that as a good strategy to try and buy.
Okay, this one is for you, Rajesh, and this one is from Hanumantaraya Gaura, and saying that he has 500 shares of HFCL that he's purchased at 50 rupees per share. Should he hold on for the longer term, or should he look to sell this particular counter? What's your view on HFCL? Should Hanumantaraya actually continue with his holding?
See, the company has been doing very good in the recent past. They have got some good orders. They're trying to move into 5G and all. But having said that, with the kind of track record this company had in the past, I don't think any HNI or institution category would try to come in. So it's better to have a trading perspective on these kind of stocks, put a stop loss and continue with your holdings. But for a longer term horizon, I think better bets could be going to some stronger names.
We've got a question coming in from Chaitu. And he's asking about Prince Pipes. He's holding on to the counter at levels of 820. Rajesh, this is for you. He's asking if this is a good counter to hold for the long term, and if not, in the space, can you suggest another name?
See, the company came out with an IPO in the recent past and has been doing very well. The counter has shown a strong up move in the last 1 month or so. And I think valuation at this point of time at least looks stretched. If it's a trading position, keep a stop loss and continue with your trade. Otherwise, if you're trying to put new money, I think there are better names in the steel space. If you can have a look at SAIL, which is likely to announce an EPS of around 40 odd rupees in the near future, or even Jindal Steel and Power would be a better and stable counter to be in.
This one is coming in from Chaitanya, and this one is for you, Kunal. Though he's asked about two stocks, I will stick to one, and he wants a short-term target for IFB Agro. He's bought this counter at 706 rupees per share, and he's saying that it's fallen by over 10% from his buy price. So what should he do? What sort of a target should he look at for IFB Agro?
So yes, the stock has fallen down. It's come back from 720 levels just about a week or two back towards 665 where it's currently trading. Ensure that you try and avoid these stocks going forward, because it's a very, very low liquid name. I think if I'm not wrong, today's volume as well is almost just 2,500-3,000 odd for stock like IFB Agros, and these are not the kind of stocks which you'd want to have specifically because entering this stock becomes a bit more easier, but exiting these stocks when markets get into a corrective phase becomes very, very challenging. So keeping that in mind, I would suggest that you can look to exit the stock, but wait out for maybe some bit of more rally, because the stock is into a consolidation. I would sense that maybe the stock can come back towards the 700 to 705 kind of a zone in the very near term. But take that as an opportunity to try and exit the stock and get back to quality names.
Okay. Auto in focus, as I mentioned at the top of the show, we've got Clifford who's messaged and who says that he thoroughly enjoys the show. Thank you so much. The show is what it is because of viewers like you, Clifford. So Rajesh, Clifford is asking about three counters in the automotive pack: Tata Motors, Eicher Motors and M&M. He's wondering whether he should add a little bit of all three or should he pick and choose?
See, I think out of these three, M&M is a strong footing. They have shown good numbers. The passenger car vehicle segment is doing well. Even the farm equipment segment is doing well. And we believe that in the next 18 months or 24 months, 18 to 24 months period, this stock can move into four-figure horizon. So this is a very strong pick, I would say. And other stocks I would like to add to this list would be Maruti in the four-wheeler space and Bajaj Auto in two-wheeler space. That's the best to be into. Eicher Motor is quite volatile. The RE numbers are not that good in the recent past, and I don't think one should avoid at this juncture.
Okay, this one is coming in from Rajiv and he is a long-term investor. He's saying he has 55 shares of HDFC AMC which he's planning to sell and switch to CAMS. So he wants to know whether is it a good decision in the longer term perspective. What's your take, Rajesh? Should Rajiv do this, take this move, sell 55 shares of HDFC AMC and switch to CAMS for the longer term?
Despite being a very good company, the stock has not done anything in the recent past. The numbers have been lagging because of various reasons. I think it's a very good decision to get out of HDFC at this point of time. But getting into CAMS would not that be a great idea. You can switch to HDFC Life, which we have a target of 1,000 rupees in the next 6 months or so. Even other names like if you want to be in a BFSI type of company, CDSL would be a good pick. Even BSE Limited, which is highly undervalued, can be a good pick.
Rajesh, I'm coming back to you on an automotive counter. Auto parts maker JBM Auto. This is a counter that has risen, I think if I'm not mistaken, 210% in the year-to-date period, currently trading at 862. We've got a viewer from Delhi, Sundrial, who's bought at levels of 400 and he's wondering whether to hold or exit. He's got a time frame of 2 to 3 years, but if I'm not mistaken, I think his targets would have been hit.
See, the targets are being hit in auto ancillary packs, be it JBM Auto or any other, if you look into the last 2 years price action. But still, I believe that the kind of movement we are witnessing in auto as such, especially after this semiconductor things get over in the next 1 quarter or so, I think auto is going to be something to watch out for. And if auto is performing, it's but obvious auto ancillary will perform. So if you're not in requirement of funds in the near future, I think you can stay put with the stock. Even other viewers who are viewing our show can have a look at this or a counters like Madan and Sumi, which has run quite a lot today. Even in mid-cap space, you have GNA Excels, which is doing very well. FIM Industries is doing very well. So these are some of the names in auto ancillary which one can have a look.
Okay, this one is from Sailaja and this one is for you, Kunal, and she's asking whether she can buy Godrej Properties in Phoenix Mills at current levels for the shorter term. What's your take? Do you think it's advisable to enter in both of these or either of these realty pack at current levels?
Well, it again depends on the kind of time frame. If it's very very short term oriented, then probably you can give a go to Godrej Properties, because I think that stock has come back to some support territories. But the only concern which I have with trying to chip into these high beta names is that you have to also understand that the market scenario has to be more of a trending scenario. We are into a consolidation phase. We are into a drag kind of a mode. I think if I'm not wrong, more than 30 to 35% of the Nifty 500 as well is trading below their or have gone through a 10% correction in the last few weeks. So I think in that sense there is a backlog of pressure which is building up on the indices. So I think on that kind of an environment, you should try and typically avoid too many risky or high beta names as trading bets. Because if these stocks tend to get into a reversal mode, the reversal gets a bit more sharper. So you can look to enter into Godrej Properties, but I would be more happy if you can probably extend your time horizon from being a very shorter term oriented, maybe couple of weeks kind, to at least a couple of years, if not more.
Okay, Coal India, it's a counter, Kunal, that we spoke about, I think if I'm not mistaken, last month, and we were surprised as to the kind of move that it made. It's currently trading about 13.5% lower from what it was last month. 160 is what the latest counter is looking like. Priyanka is wondering whether to get into this for the short term. Should she consider a trade?
A trade, I think the stock has come back into oversold territories now. Yes, Alex, we were discussing about Coal India and how the stock moved up from, I think, 135, 145 levels to at one point breaking just mildly past about the 200 mark as well. But post that, I think the stock has just gone into a more of a retracement mode. The best part about the stock, at least in this correction as well, is that the volumes have been lower comparatively as compared to the volumes when the stock was going into an uptrend mode. So that's a very positive sign. It indicates that not all longs have or long positions have been booked out on the stock at current levels, which is why oversold territories or when stock gets into a support territory should be taken as a good opportunity to create fresh longs. So would suggest the buy on Coal India at current levels.
All right, this one is coming from Kaushik as well as Anu. Both of them are asking for a short-term view on REC. For Kaushik, he wants to know whether it's right time to enter REC, while Anu wants to know that what should he do with REC. He's already bought it at 165 rupees per share levels. What's your take, Kunal? How does REC look like? What would be the right level for Kaushik to enter in, and what should Anu do with his holding?
Well, I frankly think that you should probably try and look to avoid the stock at current levels. It's a stock which has given a lot of false starts every now and then. There were breakouts which happened for REC just a couple of months back where it broke out of the inverse head and shoulder pattern. But then the rally just lasted for a month odd, and then it's fizzled down, and the stock has retraced much more than what it gained in that single month itself. So I believe it's a stock price which is more deceptive in nature in terms of price trends. The stock has also confirmed a break below its 200-day moving average. I think today or yesterday is where the breakdown has happened for REC Limited. So that also weakens the trend further for the stock. So I would suggest an avoid at current levels.
All right, gentlemen, it's time to hit the rapid fire segment. This is, remember, where we hit you with a lot of questions, and please request you to keep your answers as short as possible. The first one's for you, Kunal. Laurus Laboratories is the name of the counter. It's been through a bit of a battering. We've got Sanjay, who's holding at levels of 613, looking for a 3-month outlook. Should he hold on?
Yes, you can hold on, and in fact look to average if the stock comes closer to 450 mark yet again.
Okay, this one is from Dikshita and she wants a view on Cadila Healthcare. Rajesh, how does Cadila Healthcare look like? Should Dikshita look to invest in, and if she's invested, should she stay put with it?
Pharma is looking good at this point of time. One can invest, but as we discussed, hospital stocks are better bets.
Okay. Rajesh, Bandhan Bank bought at levels of 325. Is it a hold or an exit at this juncture? Atishay is ready to hold it for the long term.
Yes, it's a hold. It has seen quite a beating due to Assam issues, but things are looking better now.
This one is for you, Kunal, and Schneider Electric is the share. Kativaran has Schneider Electric at 120 rupees per share. Should he book losses because he believes the company's stock price is rather underperforming? What should he do?
Well, yeah, I think it's time to take out profits over here. And I sense that the stock is into a downtrending mode. It makes sense to shift from here to large cap names.
Kunal, First Source Solutions bought at levels of 207, holding for the last 3 months, can hold for another 6 months. Chandran wants to know if he should do so.
Well, yes, and I would suggest, in fact, even an averaging opportunity at current levels, come back towards its 200-day moving average. So should be a good level to try and chip in further.
Kunal, this one is also for you. This was Ujjwal wants a technical view on HDFC Bank. He's holding the counter since 1560 rupees per share. Wants a short-term view. What should he do?
Well, I think you should look to maybe try and exit the stock if it breaks below the 15-20 support. It's an important support. If the stock breaks that, I would sense at least another 50 to 70 rupee downside could be seen into the stock.
Alright guys, that brings us to the end of this edition of the query segment. Gentlemen, thank you so much for being so helpful, and I'm sure that a lot of our viewers will benefit from the suggestions that you gave them today. Look forward to speaking to you really soon. Right, on that note, we're slipping to a short break. Viewers who we missed out on, do have patience with us. We'll try and take as many questions when we come back with the query segment tomorrow. In the meanwhile, do stay tuned. We've got more on the other side of this break.